Welcome to the Mastering Commercial Real Estate Podcast, the show where we dive deep with top investors, operators, and industry pros to uncover how they're building wealth and creating real impact through commercial real estate. I'm your host, Cory Mortensen, capital raiser, commercial investor, and founder of 19 Holdings. Whether you're just getting started or looking to level up, this podcast is your go-to for real insights and actionable strategies. If you enjoyed the show, please hit that like button, leave a quick review, and share it with someone who should be listening. If you've got feedback or ideas to improve the show, I'm always open and I want to make this better for all you listeners. If you're ready to start building wealth passively through commercial real estate, visit 19holdings.com. That's ONE-9 Holdings to learn more and join our investor list. Enjoy this episode. Hey everybody, welcome to the next episode of the Mastering Commercial Real Estate Podcast. I'm your host, Cory Mortensen. Today's guest is Ryan Twomey. This is the president of American Investment Properties and co-founder of TR Capital Partners. Ryan has built an impressive career in commercial real estate, leading brokerage operations while also acquiring over 500 multifamily units through strategic investments. With a background in finance, operations, and real estate syndication, he helps investors grow and protect their wealth through passive real estate opportunities. I'm excited to dive into his journey and expertise. Please welcome Ryan Twomey to the show. Ryan, thank you so much for being on today.
Thanks for being here. Good to be on.
Yeah, so just, let's dive into your background. Tell us where you're from, tell us how you got started, and bring us up to date to what you're doing now.
Yeah, definitely. So I'm the co-founder of TR Capital Partners. I started my career right out of college in financial services, so always been involved in that world, doing wealth planning for different types of investors, before later transitioning to an analyst role with the company who was the parent company of the New York Stock Exchange. And those jobs paid well, but they took up a lot of my time. So with the goal of working for myself and really just having complete control over my schedule, I began investing in real estate to scale the income from my properties to pay my monthly expenses. So what that did was allow me to quit my corporate job and start my own company, TR Capital Partners, where we've built a community of investors, primarily working with sales executives and business owners, and have acquired 574 units that pay us every month, with a larger goal of adding another 1,000 units to that portfolio over the next 3 to 5 years.
And so what got you interested in real estate? What was the kind of catapult into, because you were starting from a finance background, and obviously some of those discussions can kind of all roll into real estate. But what made you take the leap from your finance career to the real estate career that you're in now?
I think for me, the two things really. One is pretty stereotypical. I read Rich Dad Poor Dad, and I think a lot of real estate investors, it gets your way of thinking changed. But the other one was when I was doing the wealth planning and dealing with some high net worth individuals, all of them had some sort of real estate in their portfolio. So that was something that was a light bulb moment for me as I observed how they behaved and where they allocated their capital. So I just dove right in and started learning it. In the beginning, I was doing triplexes, duplexes, the typical route, being a landlord. Figured out I hated that. I did not want to deal with tenants and maintenance calls. So I shifted towards that larger syndication model where we can actually oversee the asset from an investment perspective rather than being, the people on call to manage a broken dryer or a leaky faucet.
And in terms of, with this being the Mastering Commercial Real Estate Podcast, obviously master is kind of a strong word, but is there any strengths that you feel really stand out among the crowd for yourself that you feel are your biggest strengths? And then on the flip side of the coin, what are some weaknesses that you have? And is there anything that you do to kind of compensate for that?
I think for the strengths, and this kind of goes across the board, I think is something you need to be able to do in real estate, is building relationships with people. All of my best opportunities, whether that's with talking to brokers, talking to investors, it's all come from strong relationships and getting those opportunities presented to me to then execute on if it's something you're looking to do. I think the other thing for me, skill set wise, is the ability to evaluate a deal and take the emotion out of it. So as we know, the past maybe 3-4 years, some investors have been underwater because they overpaid for deals. Maybe they took on variable rate debt. They didn't really manage their risk properly. Whatever it might be, being able to evaluate those deals from the beginning and understand what price you can come in at while taking the emotion out of it, because obviously we want to get every deal that we possibly offer on, is a big thing. So making sure that logic over emotion takes the reins there. Now, as far as weaknesses, in the beginning for myself, it was communication, I think. So by being able to really communicate with investors, find out what their needs are, and really articulate how we can help them based off of what their pain points are, has been something for me that I have had to focus on wholeheartedly. So instead of talking solely about returns and, the definitions of things and how the deal might benefit them, you want to actually understand their world better. Now, there is a little bit of a sales component to that. I've never had a background in sales, so I didn't really know how to go about it. But I think the more you do it and the more raw action you take, whether it's in real estate or any other business, the better you get at things, because those repetitions really turn into a whole process for yourself.
And so you mentioned one of your strengths being your ability to build relationships. And what are some of the things that make you successful? What are some of the tactical pieces of advice that you would give to people who are looking to start these relationships with brokers, investors, owners? What are some of those lessons look like?
I would say definitely be intentional with what you're doing. For example, if you're looking to build relationships with brokers, figure out how you can get in front of them multiple times to really develop that in-depth relationship with them. But it all starts with really outlining three things. Your what, so what are you looking to accomplish? Why do you want to accomplish that? And then how can you do that? And I would even add to that, who can help you do that? So by doing that, it gives yourself alignment, gives you an aim, a target outcome you're looking to achieve. And then from there, you can be intentional with who you network with, how you network, and the types of relationships that you're seeking out. It's a lot easier to fire from the hip, but the results don't typically come unless you have some intentionality behind what you're looking to do in the first place, at least in my experience.
And what is one of the things, is there a mentor in your life that kind of has guided you through the process of where you are now? Was that an early mentor? Is it someone that's kind of come on later? I'm assuming you have one. You're shaking your head. Yes. Tell us a story about what that story is.
Yeah. So I actually paid for a mentor. Maybe this is probably 2 years ago now. So I paid for him to literally just teach me real estate, but also a lot of it was mindset and business approach. He owns multiple 9-figure businesses, owns just over 5,000 units himself. He runs a syndication model or a JV model similar to how we're doing now. But a lot of it was just learning from him on the process side. And then again, that whole framework I just outlined was something that he drills into us. And it's what actually creates that aim and to create a plan to hit that outcome for you. I would recommend anybody, whether that's through listening to someone that's educated through podcast, actually paying for someone to be your mentor, coach, whatever it might be. I think it's one of the best tools that you could do because it really catalyzed my growth 100%. And I used to view it as an expense rather than an investment. But in reality, if you're applying the principles they teach you and just learning from someone who's been there and done that, you should be able to get ahead a lot faster than obviously going through the trials on your own.
Yeah, the mentorship route is something that we've discussed on the show before. And I love touching on this subject because I think it is one of the most powerful aspects of anybody's business and being able to skip a lot of those roadblocks and being able to anticipate these types of things with that guidance of your mentor. And people can be divided about the paying for mentorship versus finding a mentor through normal channels. But for you seem very like that was the right decision. It wasn't, you thought of it as an expense. It really was an investment. And I think that just comes boiling down to, and tell me if I'm wrong, you finding the right mentor. This guy worked out. If anybody's going to go out there and they can find a lot of sources to pay for a mentor, being able to choose and decide who's worth paying for is kind of where you need to separate yourself from the crowd here. So what are some advice or what are some tips that you can give for people who maybe are open to paying for a mentor and would like this just to get in front of it and get a mentor right away to avoid someone who's just going to take their money and run or not be a good mentor? What are some green flags? What are some red flags?
Yeah, I will say on the payment side of things. So while I did pay for the mentor, I also got access to his network through doing so. And that's just through building a relationship with him. So I have other people that have guided me in different ways that I just simply met through him. Right. So it's kind of like you're getting access to a more successful network, at least for me, than I was currently in, and getting the knowledge I needed. But if you're going to be vetting people out, again, just like you would review a deal, take the emotion out of it 100% and know exactly what you're looking to accomplish to begin with the end in mind. And that's a big thing. I see a lot of people that say that the mentor side for paying for one or a program, whatever it might be, is kind of a scam. A lot of people fall into that bucket. In my experience, a lot of the times that's because, well, one, it may be for that specific person, but a lot of times people don't actually have a desired outcome prior to joining that program or hiring that mentor. So beginning with the end in mind is definitely something to consider, outline what you're looking to accomplish, but also do your research on the person. right? Look up reviews on them if they've done this before. Ask them specific questions that maybe feed your goals. And if you like the answers, maybe, it's a good fit. If there's some questions you have or some uneasy feeling, maybe find someone else. Like there's someone out there for everybody. You have to get the right feeling, especially if you're going to drop a lot of money on, knowledge from someone who's been in that space before.
And for someone who maybe isn't familiar with the pricing structures of paid mentorship, this can vary widely depending on who it is, what the brand name is, how involved it is, things like that. But let's just call it, this is going to be a good program. Well, let's assume this works. We got a good deal here. What are some of the pricing that someone can reasonably expect to or should be paying or should not be paying in this type of situation?
So that's a really good question. I wish I had a straight answer for you. But as we all know, so I've met a bunch of different people who have mentor coaching programs, things like that range anywhere from a few $1,000s to literally $1 million for a year. Now, all of it depends on the value you see getting out of that program, how experienced that person is. For example, some people are in that middle ground where it's maybe $40,000 or $50,000. It's really all dependent on what you're looking to accomplish, but it can be a pretty hefty price tag depending on who you go after. That's not to say the $1 million guy is better than the $5,000 guy, especially for your situation. Maybe you're not at that level yet. But what you should do is just make sure that you do have that good feeling and that desired outcome is clear before jumping into any program. So it's crazy the range of pricing that it is, I guess. And I've never paid for the $1 million one, obviously. I don't have the cash for that, but I'm sure the value is absolutely incredible. But I think there's definitely levels to that, just like there's levels to investing and levels to really anything in business,
Yeah, and this is one of those things where if you're new and you're looking at this and you're looking at the space and you're listening to this thinking, okay, I'm interested in this, it's very common to see numbers 10, 20, 30, 50,000. Really over that, I think you should be at a higher level if you're a beginner. If you're a beginner and you're cash strapped, there are some good options that are sub 10, sub $5,000. And really anything under that, I don't think is going to be worth it for both parties because both people want to charge a value that's worth it to them. These are busy individuals, investors. But, for example, I met my mentor through one of these paid programs. I had heard of him and, did my research and everything, but Real Estate Lab is one that I would highly recommend. That community, that platform is very good. They're building out an underwriting software. If you're listening and you want to get plugged into a community of investors and learn alongside a lot of people, this is one that I know and trust and would vouch for. And this is not a paid promotion. This is from my experience and with a lot of people, really good people that I trust. But moving forward, what would you say is one of the most real pivotal moments that you can identify that catapulted you forward? You knew it was, or was it gradual increase from where you are now?
A couple. So I guess from the very beginning, me going through some pretty rough evictions as a landlord that pivoted me to make that shift into the syndication side and paying for guidance. So that's literally why I started paying for a mentor and knew that I needed to make some sort of shift in my approach because I wasn't going to get to where I wanted to be by continuing to buy these small properties and manage them myself. It's pretty much like creating a second job. So that eviction, I don't want to go into too much detail, was pretty much a horror show, and it took a long time, cost me a lot of money. On the other side, it was putting myself in uncomfortable situations. So before joining these programs and doing the thing and taking a lot of action, I was somewhat of an introvert to the sense where I worked behind a computer. I didn't really have to talk to people, especially about money, on a day-by-day basis. Granted, I was always learning and I loved the topic. So one thing I would say is, and this is a big pivotal moment for me, is just start taking raw action without being fearful of rejection or how people think about you. And you're gonna make mistakes. Like, you're going to fail. There will be some times where you feel like you sounded stupid, or maybe you said the wrong thing, or whatever it might be. But the more you do it, the better you get. And now it's somewhat of more of a natural thing, considering we do it every single day. A couple things there. Really just putting yourself in uncomfortable situations and going through some of the horror stories I think we've all heard about in the landlord space, at least.
Yeah, it's definitely one of those things about just getting your reps but conquering that fear of rejection in any industry that you're in is probably one of the biggest things. And that's the early one, because before it's all classroom stuff and you're with friends and everything's pretty comfortable and familiar. And then once you get out into it, especially if you're ambitious and you're going, for yard, whether it's in your position or for your own company, that's a tough one. And once you get enough reps and you hear enough rejection and you start working on objection handlers and start feeling better about your pitch and where things should be, and you start earning more, it's almost more like self-respect, right? And being able to set boundaries for yourself and knowing where the box is with people. How much of that was a learning curve for you, or did a lot of that come naturally?
Naturally, in the sense that I messed up a lot. Again, it has organically happened. I would say that, my structure of how I have conversations and things like that came from a lot of, not necessarily a lot of failure and rejection, but a lot of me not feeling how I could be better. So, for example, one thing I do sometimes, or I used to do, was when I would hop on investor calls with someone for the first time. Usually I'm recording them. I want to take notes, make sure that I can add value to them in whatever way and whatever points we touch upon. I would actually go back and watch those as if they were game tape. Like I come from a sports background. So I would go and watch those and kind of think, where did I say, where did I not be able to answer a question? Where did I maybe come off as not, an expert in the space, and how can I improve? And I would use that to make myself better on every single call. And now it's kind of more of a smooth sailing thing and having control of the conversation itself. Because it's easy to get off the rails when you're, talking about things and questions are being thrown at you. But you want to really make sure you have control of the conversation, because again, going into it, the outcome should be to figure out if this is even a good fit between you and the investor in the first place. And if so, how can you help them with whatever their financial gap or desire or lifestyle desire might be, using the investment vehicles that you are a part of, whether that's real estate or RVs or whatever else it might be.
Yeah, I think that's a great tip to record the conversations that you're having as much as possible and listen to them back. And I love that analogy, like it's game tape, because when you analyze that and you take into account, okay, it is difficult to get everything you want to say out the first time, second time, 10 time, it's important to keep track of that. And Lord knows I'm guilty of it. I mean, if you've been listening to this podcast for a while, you guys know I can ramble on, but no, it's a good tip. And for you, what would you say is your biggest success to date? Is there a success that has really been that milestone that you've been chasing? And what was that? What was the story? What was the detail? Was it a specific deal? And it can even be before you started the commercial real estate stuff.
I think two big successes have happened in the past couple of years that were a part of my ideal outcome. One was I quit my job. I was able to do my real estate full time after about 16 months or so of being in the syndication space. And I had that mapped out for a lot longer time horizon. So it happened quicker than I thought. It was a great thing to be able to do that and really have control over my schedule, which was obviously the ideal outcome I wanted. The other was after our first deal. Turns out it was a home run. We purchased the deal. It was 435 unit RV resort. And last month we returned $10 million of investor capital after just 14 months of owning the asset. Their risk is completely out of the equation, equity. And we're going to hopefully about 4 to 4.5x their capital in about 7 years on that asset. But getting them back their initial investment that fast and just really being able to solidify trust with those investors has been a huge win for not just them, but obviously us as well, on the side of like, okay, we know what we're doing, making the right choices, and we look to apply the same principles to all of our future assets as well, whether that be in the multifamily space, with RVs, debt funds, anything that we potentially will do in the future. Those are two pretty big wins for the past couple of years for us.
No, and that's incredible. And congratulations on the success of that RV deal, especially in this environment with how valuations have gone, how the market has gone. And did you say that was your first deal or your most recent deal?
That was my first syndication deal.
Gotcha. And what made you tackle that as your first syndication? Because that's not a small deal. And where is this deal located?
This one's in Robert, Louisiana. It's about 15 minutes from New Orleans.
Gotcha. And so this isn't even in your backyard either, right?
No. So going back to what I was saying before about relationships, I networked relentlessly. I built relationships with a lot of people, operators, people I needed to sponsor my deals at the time. And this simply organically happened through getting referred to from other people I've met within the multifamily community in general. So I didn't even know what RVs were an option at this point. I was asked to potentially look into this deal with him. I did a lot of educating myself in a short amount of time and really studied the market. It helps that he had an incredible track record. Obviously, this is just adding to that. But all these kind of green flags started happening. And going back to the networking side, building relationships with people, no matter if it's someone that's doing 10 deals a year or someone that's just brand new in the space, everyone knows someone, right? So the more you can add value to others, the more you're likely to get referred to different opportunities, or maybe they'll come to you directly with an opportunity. So that's how it started to spark from there. Since then, we've only done multifamily stuff, but that RV deal was, pretty incredible, especially when we're starting off from literally zero at that point.
Yeah, I'm blown away that you completely went off the beaten path of looking at multifamily and chose a 400 plus unit RV park. And, again, congratulations on the success. How big was that deal when you guys bought it?
So the purchase price was $4 million. That was because the seller, so to give you a backstory, the seller's wife got really sick. Literally had to get rid of the property itself to pay for medical bills and make sure she was okay until, things passed. So it was $4 million for the purchase, but we did a heavy lift. So it was a $9 million raise. So we had to pretty much reposition the whole entire park. And that included installing like 7 pools. There was a lazy river, a bunch of other things involved, a lot of tech. It's actually funny, speaking of wins, we have 75 cabins on the site, and those have not been renovated since like the 60s or 70s. They had that gross yellow and like pink, and it just looks like a cartoon. So we hired interior designers to go in and create a competition for the best, renovation of what those cabins look like. The cash prize was $40,000. And we filmed it all and then sold the rights to HGTV, and we got them all paid for. And now we use it as a marketing tool. So the park's booked out for the next 2 years. And it's like one of those flip shows. If you haven't looked it up, it's Cabin Wars, Flip It to Win It. So just give it a look.
That's incredible. And what gave you the idea to do a brand deal, a collaboration with HGTV, especially with HGTV not working in the RV park department, So how did that come to be?
Yeah, that was, again, going back to the sponsor or the key principal on the deal. He's just, he's a guru when it comes to arbitrage and different kind of opportunities not a lot of other operators will be able to see. So he came with the idea of just filming it and seeing what happens, maybe doing like a YouTube show, just something to gain marketing for the park itself. It just so happened that it was such a hit that a couple months later, Apple TV and HGTV were all bidding on the rights for it. And so it aired last year in June or July for the first time, I believe. So it just turned into this larger thing, but essentially was supposed to be used as just a marketing tool to get more people interested in the park itself.
That's incredible. I'm going to have to go and check that out.
Yeah. Let me know what you think.
Switching gears into kind of the multifamily space. What is your bread and butter that you usually look at, your asset? Is it older? Is it 2000s, Class A, B? What are some of the properties that you guys like to look at?
So typically it depends. So I'm from Massachusetts. Most of the properties here are very old. So finding an 80s or a 2000s or newer vintage is hard unless it's something that was just built. In some cases, we're buying stuff that's, 1950s. Usually if we do that, we want to have a brick building. So, it's less maintenance on the structural side, but also we want to make sure that we only go into the asset if it's older, if the electrical and the plumbing has been updated within the last 20 years. The reason for that is anything over roughly 70s or 80s vintage tends to have, aluminum wiring and then the galvanized piping for plumbing or whatever else it might be. And that stuff tends to be hazardous and also could potentially lead to, fires and whatever else it might be. So that's kind of the stipulation we have if we do look for older properties. But for the most part, typical Class C value add type of properties where we're looking to get about 15-20% returns annually for investors over a 5 to 7 year period or so is our main target.
And in terms of deal flow in your market, you've got this deal, that first deal in Louisiana. Are you still open to national deals? Do you have deals also around the country, or are you more focused after that first deal just in your own backyard?
So we have some in Minnesota as well. Again, it was through a referral to someone that we knew within our network. So that was kind of a one-off. Right now, we're focused heavily in Massachusetts, Springfield, Massachusetts, and then right outside of Boston specifically. So our goal there is to get 1,000 units in those areas in the next 3 to 5 years. And the deal flow, my acquisitions guy has been a broker for 20, 30 years, something like that. So he has incredible relationships in the market itself. So he's getting deal flow on anything from 10 units up to 130 in the area. So anything under $3 million purchase price, we'll look to JV with one equity partner. Anything over 3 million, we'll look to syndicate. So that's kind of what our deal flow looks like right now. That there's a lot of stuff coming in the door, and obviously it just comes down to, can we meet at the right price to make it work for our investors and hit our numbers?
And in your experience over the last, let's call it the last 2 years with the changes in valuation or the lack thereof, what is your strategy for negotiating and putting offers out at this point in the market?
So, I mean, I don't think it's changed much for us. If we can't hit our metrics, we simply don't offer. Or we do offer and we tell them why it's below it's 90% of the time it's below what they're asking. As you know, in the past couple of years, sellers think they can get 2021 prices still. Yeah, they're going crazy. So we will just tell them, even though we're coming, say, $1 million below asking, this is why. This market does not dictate the asking price at this time. We need to hit these returns, whatever it might be. From there, if they accept it, great. If they don't, move on. Maybe you'll come back in the future. We've had deals that we have not moved forward with because the price was too, they didn't come meet us at our price, and then we just waited a few months and they came back to us and gave us the deal at what we originally offered. So we don't really budge once we have that top number in place. And, that's mainly because we first need to protect capital in order to grow it. And if we're taking emotion into it and trying to force a deal, that's when people get into trouble, as we've seen in the past 3 to 5 years or so.
Yeah. And that's the most important thing. There's a lot of things to be said about being a great operator and running a good business plan, renovating the units. But, and you're a finance guy, so you understand how the numbers work. But the two things that move the needle the most are your purchase price and your exit cap. And those are the things that really lock in probably about 75 to 80% of your return when you're running those types of financial calculations, IRR and your total return and things like that. So to be very stubborn about your purchase price is the way to go. And that's where people really got out of control in the last few years. And you mentioned it before with people who are in the red and underwater, and, people who wanted deals and wanted assets under management and doors to advertise and deal flow, but they forgot about what it's all about, which is the investment part and the numbers and the returns and things. And so for you, when you're taking a look at these deals, the spreads, how far apart are you guys usually when you're looking at deals? Because for me, if it's an on-market deal, I'm normally probably anywhere from 30 to even 50% off looking at Texas, primary Texas markets. I'm not sure how it is over there, Massachusetts area.
If it's on the market, it's pretty similar. The ones that are on market and are available to the public are typically there because no one wanted to pay the price that the broker sent it to on the private end. Now, if it's off market, we have a lot more flexibility. Typically, it's directly to a relationship we already have with the seller, or we're very close with that broker. So we're on, what we would call like his preferred list, because we've proven that we can close. So in that case, the spreads are a little different. For example, we just got a property under contract for, it's a 24 unit, 4.8 million. I think the guy was asking like 5.2. So not a crazy difference in the spread. However, if that was on market, you might see that up over 6. And then, you still come with the same offering price. I do think they're starting to come down now. Some sellers are realizing they can't get those higher prices depending on the market you're in. So they might take a little bit of a haircut, or maybe they're holding for longer, which I think is another reason that transaction volume was down. However, those spreads have become closer over the past 6 to 9 months, I would call it.
Yeah, and thank God, because it's just too much. And at what point do you give them a number, and what point do you just say, I'm not even gonna thank you, but no thank you?
So I usually let my acquisitions team handle that. Making that decision. However, if we really like the asset, really like the property, location, if it's in one of those markets we're trying to grow a footprint in, we'll offer really at any price that we think works. And that's assuming that there's no other issues with the property. Obviously, price isn't the only thing, but it's the major one. But really, what we'll do is we'll simply submit the offer, and if we're way off, we'll just outline exactly why. That way we don't look like we're lowballing. We have a reason behind all this stuff, and it actually gives the seller some feedback to maybe change his mind a little bit, or it gives the broker feedback to really solidify our buy box and how we evaluate and operate our deals. So either way, worst case scenario, we don't get it, but it's definitely not something I want to force. And I wouldn't say that there's, a specific point in where we'll invest or not invest, but definitely don't want to be lowballing, too big, because at that point, it just makes everyone mad and waste your time.
Right. Yeah. That's where the art comes in. Everything's a science and it's all finance, but yeah, this is where the art of being a good operator and keeping these relationships going, you can really find out. But when you are making new relationships and keeping these relationships, and more importantly, nurturing them, what are some of the things that you do to keep the relationships going and strengthen them? Think about, some of the brokers that you work with closely outside of the ones that you've closed with. How are you nurturing and growing these relationships and staying strong with them, and also investors?
Yeah, so I mean, I focus more on the investor side. However, I know with brokers, simply just doing basic things like, going to grab a drink, maybe grab a lunch, coffee, like actually building a true in-person relationship that doesn't hinge on transactions. Whether that's with investors or brokers, that's going to be the way to go. Do as much as you can to actually develop that relationship. With investors, we have created somewhat of an investor community, we call it, where we're just looking to add as much value as possible every single week and every single month to our list. So every week we'll send out, an email to our investors going over various things we're seeing in the market, maybe what we're working on, some educational things, maybe some tools that they can use, not just for real estate, but their wealth building lives in general. And the same goes for our webinars. We hold a monthly webinar. It's simply just to get in front of everyone. It's very, very informal, very casual, and we bring on some other expert within the wealth building space. So for example, a couple months ago, we had a guy on that showed them how to lower their tax burden, right before tax season. What better guy to have on? We'll do some that have estate planning or other portfolio management. It depends on what the month is, but there's just different topics. And the goal there is to give them all the tools they need. So we're not just constantly throwing real estate down their throat, right? We actually want to make sure that they're getting value from us. And that way you're developing a relationship that isn't so transactional. But that's kind of how our approach is, really just giving them the tools and resources to do anything they want in the business, whether that's invest with us or through another party.
No, and I love that. I think that's a fantastic idea, and that's something that I for some reason just haven't thought of on the webinar side. Outside of me being in the residential space, that's very common to do these kind of cross promotions with title and lenders, education, tax people who can help, lower your bill, things like that, vendor lists and things like that. And I don't know why I haven't thought of putting that together for this new demographic, not the home buyer, but the high net worth individual, institutional shop, whatever it may be. So I think that's a really valuable tip. Your investing strategy, and we've kind of talked about it just a little bit, but how would you summarize it's changed over the last few years, your approach to either your underwriting or just the business in general?
Well, for me, it was really shifting from the small stuff to the big stuff. And the reason for that is, well, two. One, I didn't want to deal with tenants, but two, the way that properties are valued on the commercial side, whether that's multifamily or RV or industrial, whatever it might be, as you know, it's valued by the NOI, the income, the actual profit that it's producing. So that was a light bulb moment for me where I figured if I can control the expenses and continue to increase the income, I'm directly impacting the value of the property itself. So I therefore have more control over my investment strategy, kind of have a better idea of what my projected returns will look like, assuming that we can operate and execute the way we plan to, rather than maybe putting it into a mutual fund or something that's like we've seen the past couple of weeks, people losing half of their K overnight. So those things were a big shift for me, considering I come from the traditional background of go to school, get a job, invest in retirement accounts for 40 years, and then wait. So by taking more control, whether that's through the cash flow side of things on the triplexes, duplexes, or really taking that next level on the commercial side, was a big shift for me as well. And I think it all comes down to your education, also your mindset, and being confident enough that you can actually execute on what you're doing.
And for you, outside of the mentors that you've had and the partners that you've developed relationships with, what are some of the resources that allow you to be so confident in this industry? That can be either newsletters, technology, software. What are some of the things that you use in your tech stack that could be useful for others?
I think really just staying up to date on different strategies. I'm not sure if you've ever heard of CRE Daily. It kind of just tells you about the multifamily market or any real estate, commercial real estate market in general. Staying up to date with your stuff, continuing to educate yourself, not just on real estate and this type of investing, but also other types and other vehicles as well. And then just continuing to put yourself out there and be willing to fail and adapt. The last thing you want is to make the same mistake twice. I think the continuous education side of things, really connecting with other people and networking relentlessly to learn how they approach stuff and trying to apply it to your business as well, goes a long way, pretty much in any part of the investing side of things, really even just your personal side too, growth as an individual, not just within your business.
And you've mentioned different aspects of your team. You have an acquisitions guy. How big is your team, and what other roles do they fill?
So my specific team, TR Capital Partners, is just me and one other partner. However, the operators that we work with, we tend to work with one pretty much exclusively now. They have their underwriter, asset manager, and acquisitions. So even though we're under different LLCs, we are all the same team because we're doing all these deals together. There's 6 of us. One is the one that has the net worth. He essentially is the bankroll, to get the loans and the lending. The other is the acquisitions. His name is Brian. He's the one that's been a broker for a long time. Really just his day-to-day is finding deals and underwriting them. That's alongside us. And then from my partner and I, his name's Lucas, our role is to be the investor relations on that team and be able to bring the capital in as well. So we do it. There's a bunch of different roles we have. It's really created like a real business where everyone has something they need to be doing to fulfill the end goal. But I like it better that way, especially working with one operator exclusively now rather than bouncing around how we did at the beginning, because it really solidifies a team and we all know how we work together now. So the system is very clear, the process is simple, and then it just comes down to making sure that we're hitting our target metrics, whatever those look like for that deal for those investors.
And having 6 partners is no joke, and can be something that can be very difficult, can be very advantageous, obviously. But what were some of the things that set this partnership structure up for success? Did you have any partnerships before that may have went well or didn't go well, or what were some of the lessons that you learned in this partnership or any previous ones?
So I had a couple that went very well. One of them was that RV deal. We're still holding it. That's probably the best one we've had so far. Our second deal was in Minnesota. I don't live there. However, the one thing I do like about being close to home is the in-person relationship we've been able to build with these other 4 guys. And the reason for that is we can go drive 30 minutes and grab dinner or grab a drink or go talk to investors or hold some sort of event, whatever, walk the properties together, whatever it might be. I think making that transition to really dealing with people that I can go meet in person on a weekly basis has catapulted our success while also making us more confident in our approach, just because, again, working with the same people over and over again, your systems become pretty much solidified. And if things do change, since we do have that strong relationship, we have no problem giving each other constructive feedback. So at that point, it comes down to finding the right people that are willing to accept whatever feedback you're giving them. In this case, it's been a pretty seamless relationship in that regard, which I appreciate as well.
And any tips for managing others in the relationship, and whether it's vendors, partners, investors, what are some of the guidelines and some lessons that, in terms of you being a leader and being a manager of others, because that's a very difficult aspect of business, is working with others and being able to put people in a position to succeed. What are some lessons that you've discovered in that light?
Yeah, I would say just be very clear on what your expectations are from the beginning. The last thing you want is to have communication fall through the cracks and what you're expecting is not what's being delivered. And then you have animosity for each other or whatever it might be. All right, so we've had some instances in the very beginning where maybe the property management team we were working with was not doing or not performing the way they should be. And that was 100% our fault. I take ownership of that for not really being on what we're looking to accomplish with specific expectations. Now, it didn't really affect the deal, in a big way. It's recovered and it's doing great since then. But I think whether it's with your partners directly, like the other GPs, or with a property management team or anybody else involved on the general partnership side, just be very clear in what your role is, what you expect, and hold them accountable to those things, and make sure that if they're not a person that's willing to be held accountable and maybe get some constructive criticism once in a while, that it might not be someone you want to work with. So that's just my perspective on things and how it's worked out.
Yeah, I agree. It very much needs to be a two-way street of honesty, transparency, accountability, and hard work, and most importantly, respect. And
Yep.
I think if you have a lot of those, that'll get you through about 80-90% of what's out there for you in the partnership. So you personally, and kind of just switching gears a little bit to mindset and what you do personally, do you have a routine? What does your average day look like in your business?
So routine, I guess, kind of. So I try to start my day with going to the gym, making sure I get active, drinking my water, things like that, getting hydrated, ready for the day. As far as, those in-depth morning routines and stuff like that you see on like Instagram and all that, I don't really have one of those. Honestly, the quicker I can get to work and start having some small wins, the better my day turns out to be for the most part.
You're not doing any sparkling water face dunks?
No, not doing any of that stuff. But I think for me, it's just like you could just get to work as soon as possible. And the biggest I guess part of my routine is I try to make sure I always keep the promises I make to myself every day. And that could be going for a workout. It could be waking up at X time. It could be, getting these top three things done throughout the day, doing something uncomfortable. For example, I have another company that's a cleaning company, and I'm committed to making 50 cold calls every single day to try to get us partnerships with different people in the area. So that's very uncomfortable for me. But making sure that you do that and sticking to those routines and those promises you made, I think will get you ahead of a lot of people.
Yeah, and that's a superpower that can be a struggle for a lot of people. If you're like me, it's very hard to ignore shiny object syndrome and
Yes.
switch from this task to that task. And so in terms of being able to keep those promises to yourself, has there ever been a time that you kind of struggled with that, and or even just when you were building that muscle, what were some of the things that you continually had to tell yourself or worked on so that you were able to get to that point to where it didn't become such a issue, or not so much an issue but a challenge to complete the things that you need to do to move the mountains necessarily?
I think it's mostly just comes from realizing that what you're not changing, you're choosing. So if you're not in the position you want to be in, and this might sound harsh, it's 100% your fault. If you're staying stagnant, if you're not where you want to be, it's probably because of some choices you've made. So maybe take some time to reevaluate how your day, how your week, how your month, how your year went, and make the changes that are necessary, and just be disciplined enough to actually execute on what you're telling yourself. Now, in the beginning, it might be hard to do that for a month straight. But I promise you, after you do that for maybe a month or two, it just becomes second nature. It could be something as small as like stopping drinking soda, or, waking up earlier. Like, it could be something small like that. It's not going to be easy in the beginning because it's a habit you've probably formed over a long time. But, being disciplined over a long period, a long time horizon is going to help you break that, which, again, you just add another win to your plate. First, identify where you want to be. Figure out why you're not there yet. It's probably because of some choices you are or aren't making, and then just commit to changing whatever those choices might be.
And where do some of these lessons that you're talking about come from? Where does this kind of mindset, how would you describe your mindset, and where do you think that these foundations were laying for you?
I think a lot of it has been, initially was from just different books I read, also a lot of different podcasts I'll listen to. I'm not sure if you're familiar with Alex Hormozy. He's a big guy that I listen to a lot, business guy. Also my mentor itself. So my mentor is a big, your actions lead to where your outcomes. And by really internalizing that and how someone kind of drill it into you, it's gotten me to start thinking that way. I think before I started my own business, I was kind of on autopilot, like a lot of people with their W-2s. You go to work, you come home, maybe watch some Netflix, eat, go to sleep, repeat. And there was obviously I wanted a different outcome. I did not want to be doing that for 40 years. But something clicked at one point or another where I knew I had to make different choices. And whether that's sacrificing stuff, that's taking on new things, that's really sticking to saying no to things that aren't serving whatever that goal is. There's a lot of things you're going to have to add to your plate and then take away. I just think that getting started in that regard will be beneficial for, I guess, anyone listening to this.
And for you, when you're setting your goals and setting the things that you want to focus on, what are some examples of the goals that you have right now? And do you have a system for completing these goals outside of kind of the things that we just spoke on?
So I guess, for example, one of our goals this year was to raise another $4 million, right? So that means $1 million a quarter, about 300 something thousand a month. How do we get to that point? And we break that down through a few different avenues. One is how are we going to add value to our current investor list, and then how are we going to add value to people who aren't currently in our network but are looking for these opportunities to start building those relationships and trust. In my experience with most businesses, there's really 4 key ways that you can get new leads in the door, per se. There's cold outreach, which is making those cold calls, those cold DMs, that LinkedIn stuff. There is warm outreach, which is adding value to your current network. That's something we do every week, every month with those webinars. There is paid ads, which I have never done. I don't know how to do them. That's probably why. And then there's also just creating free content like this, putting podcasts out, putting stuff out on LinkedIn, trying to share your own story and add value to others who might not know that some of these types of investments exist in the first place. So I make it a point every day to hit on all of those things, minus the paid ads, hit on those other 3 things to get new leads in the door and then stay up to date with my current investor community and be able to add value to them there. So that's just one example of how I structure things. But again, it's the what you're looking to accomplish, why you want to accomplish it, how are you going to do that with specific steps, and then who can help you. And then really sitting down and outlining those things and only doing those and sticking to the script per se and not veering off track.
And what would you say is the biggest lesson that you've learned in real estate, business, life in general?
Discipline is key. I guess kind of going back to what I was just saying before, it's easy to veer off track, and 1 degree of separation could lead to a huge difference in outcome over a long time horizon. I think that's the one thing. And then also getting super clear on what you're looking to accomplish has been something that's helped me a lot, because it keeps your eye on it, and it gives you a vision. It gives you an aim to start achieving for. So, I mean, going back to what I was saying before about the W-2 stuff, I didn't really have any vision other than to quit my job. Okay, so what does that look like? You have to drill in deeper to that. To quit your job, you need X amount every month to come in. Okay, how can I do that? And continue to break it down that way. So the biggest thing that's allowed me, I think, to get to where I'm at now, and I'm by no means where I want to be, is just set that goal and then reverse engineer it so deep that I can no longer ask, why or how, because all that stuff's already been outlined, and then just creating a game plan.
And so, Ryan, before we wrap up here, I just want to thank you. It was a privilege and an honor to have you on today. Thank you.
Thank you for having me on. I really appreciate it. Hopefully we can do another one in the future.
Yeah, absolutely. But just a couple wrap up questions. These are totally unrelated. First car, first job.
First car, which I actually still drive because I don't want to pay for a car, is a Honda Civic. It's a little bit of a beater at this point, but it was brand new when I bought it. My first job, if we're going back to, very, very first job, pizza delivery guy.
No way.
Years old. Yep. And I loved it because I got free food out of it. My first real job was financial advising right out of college. But if we're going back, way back, I was grinding for tips by delivering food.
Was that in the Civic?
No, that was my mom's car at the time. I was in high school.
I love it. Well, last question. What is the last piece of advice that you would impart on the listeners before we take off?
I think one is just figure out where you're at compared to where you want to go. And I know I've kind of harped on this a lot, but then just reverse engineer how you're going to fill that gap and stick to it. I mean, even just 6 straight months of focus can really change a lot. I mean, that's when you're going to start building new habits that will exponentially create growth in not just your life, but in your business as well over time. And then the biggest changer for me, whether that's through mindset or actually having opportunities, is just being intentional with building your network. So rather than just going to random events and talking to people, actually be intentional who you want to talk to, why, and how you're going to be able to do so. And I guarantee you more opportunities will come from those relationships than probably most of the other ones that you have right now, at least in my experience.
I love it. Well, that's a great place to end. Ryan, again, thank you so much for being on today. This has been the latest episode of the Mastering Commercial Real Estate Podcast. I'm your host, Cory Mortensen, and we'll see you next time. Well, that's a wrap for today's episode of the Mastering Commercial Real Estate Podcast. Thank you so much for listening. If you enjoyed the episode, go ahead and give it a like, leave a review, or share it with a friend. It really helps us grow and reach more people who want to master this space. If you have any feedback or ideas to improve the show, reach out, leave a comment. I'm always looking to make it better and tell us what you like or didn't like. And don't forget, if you're ready to start investing passively and want to learn more about upcoming commercial real estate deals, head over to ONE-9 Holdings. That's 19 Holdings, and join the investor list. Thanks again for listening, and I'll catch you on the next episode.